Hello, I'm Donald Leggett, and welcome to the latest London South East CEO interview. I'm joined today by Leslie Peterkin, the CEO of AIM-listed oil and gas investment vehicle, Advance Energy. Welcome, Leslie.
Hello, Donald. How are you?
I understand you're coming today from Geneva.
I am. I've been living in Geneva for a number of years. It's a pleasant place.
Fantastic. So you run Advance Energy from there, do you?
Yeah, I mean, we're five guys. Two are in London, one is in Kiev, the other is in Perth, Australia, and me.
So suitably multinational.
We're suitably multinational, and also in the current circumstances, we've been working from home since the start.
And lots of fingers in lots of different markets. That is very interesting.
Yeah. Well, we're a broadly experienced group, and have found ourselves in different locations, but that actually works very well in the current circumstances.
It does indeed. So let's start by asking you to describe Advance Energy to the uninitiated.
Yeah, okay. Look, we're a relatively new name around, having taken over an existing listed small cap shell called Andalas in February. Basically, it was a failing company, and the guys were looking for an exit, and somebody suggested that we take it on. Sorry, and we had a number of interesting assets that we wanted to get into a vehicle, so it worked well for us. And if I was to describe the advances, that sort of five key tenets, as I call it, are: we're non-operated, we're only interested in what is discovered, we don't do exploration, so no exploration. We're interested in being non-operated with two-party joint ventures, and we can talk about that a bit more. There's a good reason for that. In terms of location, we're Eastern Hemisphere, excluding Russia, China, and Iran. We have actually got quite a lot of experience in the Americas, but there's a lot more people with more experience than us, so we've decided to leave that out. But we have a lot of experience in the East, as it were. We're three founders, and we have easily 100 years of international E&P experience, technical, commercial, and we have, most particularly, from, I think, investors' point of view and shareholders' point of view, we have a record of serial delivery of added value to existing fields, both oil and gas. Keyword: materiality. Materiality is a keyword at Advance, and it's primarily what Advance is about. And again, we can talk a bit more about that. But on our website, we have a presentation that talks to that very point.
By materiality, do you mean you make a difference?
Materiality in terms of assets, in terms of outcomes, in terms of production. So we're not looking for small assets or difficult assets that are, being rehabilitated, 100 barrel a day wells or something like that. We want to get something that's going to do net for us 20,000 barrels a day or 10,000 barrels a day.
Now, forgive me for being bold, Leslie, but you've been quite prescriptive there. It's like you go on a dating site and then you say you only want, your partner to look like this, and this. But how many partners are there out there? How many oil and gas deals are there out there which are the perfect one?
There are more than you might imagine, but we have a specific niche that we're looking at, and we can talk about maybe that from against one of your other questions. Well, the one thing I just wanted to finish off your first question with was we have, in our view, an original strategy, and that combined with our experience tells us that, in our view, we will deliver substantial value once we get traction.
But let's be blunt, everybody says that. So what actually differentiates you guys?
Our experience, the asset base that we brought in with us, and these are all assets that are effectively they're discovered but not developed, and they have had some issues, either commercial or technical, that haven't been resolved by other parties that have looked at it, or them, and we have a different view, and we're pursuing those on the basis that we can unlock value that others perhaps weren't able to do.
So you think you've got quite a high-end type of experience that you can bring to the table?
Absolutely.
You're not your standard oily.
We don't think so. We don't think so at all. No, it's always very difficult to explain to people what you've delivered in the past, but we are putting some more stuff on our website that talks to that. In the presentation that currently is on the website, there's one case study where we essentially took a 13-year fallow field, John Patrick, which is one of the founders, and myself, from not being developed and being ignored by everybody to what became an 80 million barrel field.
Okay. So let's explore onwards. Why do you prefer a stake in an asset rather than to be the operator? What for you are the advantages in that?
Right. Yeah, there's some key advantages in our with respect to our strategy. Being an operator is great fun, by the way, great experience, and doing what we're doing is very important to have been an operator because you understand the all the business of running a joint venture. But to do that, you require significant manpower, and if you're going to be international, you need a portfolio. You'll have a portfolio eventually. You're not going to be a one asset company, and that means having offices in various countries. That means a lot of complicated interactions between lots of people on a base and so on. Two issues arise if one is non-operated. Firstly, we can parachute into any particular country in short time. If we find an asset in some place that we haven't got an asset at the current time, we can decide to go there, but we don't have to put an office in place and we don't have to put people on the ground. So we're not obliged even to build a portfolio of assets in any country. We might find a very good asset in one country and stick with that. However, if you're an operator, you're kind of obliged to get a portfolio. It's not so easy to run an operated business with just one asset or in a country. Secondly, perhaps equally important for shareholders, as a small, focused, non-operating team, means we have a very low G&A. We are 5 guys at the moment. We will need more people eventually. But the other part of our strategy in building the company is that we're going to have a core of people, which is ourselves, which may grow to some degree. But then we're going to build alliance partnerships with various people. So, for instance, Exodus, I think, is quite well known in London. I'm not sure whether you're familiar with them, but they're a subsurface and facilities group that have been around for a while. I've worked for them in the past. We have an MSA with them, so we have a master services agreement with them. And they'll be our technical support when we want to do work that involves understanding an asset or persuading an operator to do something that he doesn't want to do. But we don't have to have a team of people sitting around screens all the time.
I got it. Low G&A.
Low G&A.
Do the current market conditions, which are very tricky, oil and gas prices are low, does that actually make it easier to buy good assets because assets and services are cheaper? Or distressed, or harder because funders are less likely to back you because of the very distress?
Well, distress is good because in our situation, we're unencumbered right now. We have no debt, zero debt. We're totally clean. We're a new company getting started. So, yeah, I mean, we've seen many oil price crashes in the past. We're all a bit gray-haired, as you can see. But that brings experience as well. We know the behaviors that go along with those low oil price crashes. And often it spells opportunity. If you've got, like a lot of people in the North Sea, for example, lots of debt, your assets are producing at or below operating cost, you're really in deep trouble, and you're not in the business of acquiring more assets. But we don't have that problem. So yes, with these current difficulties, we thought, my goodness, perhaps we didn't make a very good. We were very unlucky. I wouldn't say it was by choice, of course, in coming into the market with our new companies in the first quarter of this year. But then we reflected on it and thought, well, this is likely to throw up some good opportunities. So let's just hang around and see how we go. And that's largely been the case. So assets are available.
Let me interrupt you there.
Yeah,
what have you seen so far?
What have I seen so far?
Which gets you excited?
Well, I can't be too specific, but at the moment we're working on the portfolio that we brought into the company, but we certainly see other opportunities being offered to us, and one in particular has come to us since we started, and we're pursuing that one with some interest. But that's probably back in the chain, as it were, to some degree, okay, but not too far. Yeah,
you've got 500,000 that you put into the business. Presumably, I'm presuming a lot here. never assume, but I am assuming that sorts out your working capital. That's really there for day-to-day working capital.
Yeah, I mean, it's to run the business. Three of us put the three founders put that sum of money in back in February, and it was essentially to fund the company, which was essentially broke, had no money left when we took it over, and we've been using that to run the company forward. And we'll probably need to, raise a little bit more in due course. But we're hoping to, as I say, do some a transaction of some magnitude in the not too distant future. In which case, we won't be necessarily in the position of having to raise money on an ongoing basis. So and that's certainly one of the key things for us. We're always interested in looking at assets that will provide cash flow, so we don't have to come back to the market and keep asking for funds to keep going. That's definitely one of our tenets as well.
So you're not going to be raising capital, but would you be raising debt?
Debt is very much part of our equation. The equation of what we want to do with the assets that we want to acquire. Cash flow is part of the equation, and then debt is then part of the equation as well.
Oh, so you buy an asset, and the asset then pays for itself, give or take?
As well, yes.
That's pretty smart if you can do that.
Yeah, and we can.
Okay. Oh, I love that certainty, Leslie. Very good.
All I can say is we've been doing this for a long time, and we have success behind us in the past, and we want to bring that success into what we want to do going forward.
I don't doubt you for 1 second. When might we expect to hear of a deal announcement? We've been talking endlessly about it with great excitement. When in reality might it happen?
Well, I mean, I always get asked this question, and of course, everybody has to be careful what they say. We're a name-listed company, but what I would say is, a few weeks ago, I stated in a podcast that I did that we were confident of closing a material deal within the next 6 months. So I would say now it should be closer.
Now, do you still see a future for oil, despite the talk of peaked oil? All my oil and gas analyst friends are no longer oil and gas analysts because they're pulling out. They think oil's done. But is that how you see it? Is there no more money to made out of oil?
Well, let me say that this is the 6th oil price crash that I've been involved in, and our team has been involved with in one way or the other. So we have a lot of experience of oil price crashes and the market coming back. The dynamics of this time are definitely different.
Which takes us to your non-core assets. You've got some in the North Sea, you've got some in Indonesia. Is there any value that you can extract from those?
Well, these are legacy assets that we acquired as part of the takeover. And if you look at our website, very recently we exited from Indonesia. Indonesia is not one of our core areas. I don't want to talk too much about core areas because core areas tends to be about operators. They have core areas. We don't have a core area. We can go wherever we feel we can find value.
But you don't really fancy those assets in Indonesia, which is fine.
Well, no. We've exited. We've formally exited the assets with no cost to ourselves. In fact, the contract that was in place was about to terminate anyway, so naturally, so it all fell into place quite happily. And then we inherited 2 assets in the North Sea, not in the North Sea, in the UK, in the southwest, one onshore, one offshore. And those are still live at the moment, but not very active. We'll see how they progress in 2020. We have actually been awarded 2 blocks in the southern North Sea from the 32nd round, and we're starting to evaluate those, and we'll look to seeing how we can extract value from those going forward.
Okay, and those are gas?
They're gas, yeah.
Okay. Where do you see Advanced Energy in 2 years' time? A fantastic question to ask you in this your nascent state. You dream of being a mid-cap. Fewer make the distance. Will you?
We expect to make the distance.
Over what time frame?
I think 2 to 3 years.
Good on you.
Yeah.
Hope you come back and speak to us in 2 or 3 years' time. And
well, we have the experience, we have the strategy, and we have the opportunities in hand to get there.
And we can come back in 3 years' time and I'll say congratulations. You told me so.
I'd love I told you so.
Leslie Peterkin, CEO of Advanced Energy, thank you so much for your time. That was really interesting. For more interviews like this one, please subscribe to the London Southeast YouTube channel. Hopefully you enjoyed this interview. You'll see lots more on there. Thank you very much indeed for watching, and do stay safe.